Hey everyone, welcome to March. It's hard to believe that it's already March the 7th. I'm a little late getting this out, but we wanted to take a look at what took place in the month of February. I know everybody is just dying to know where the market's going. We're hearing a lot of different conflicting news reports. People have different opinions about what's happening. We hear a lot about interest rates. We hear a lot about slowing economy. And then we also hear a lot about people moving to Calgary. So I'm going to make sense out of it all with using the stats today. And hopefully that gives you all a better understanding of what's happening. And if you're making some real estate decisions, maybe this data can be helpful for you in deciding whether that those decisions are right to do now or whether you want to wait. So let's just move down here. I'm going to skip down to some of the stats that I want to go over right off the bat. Take a look at the sales for February, 1,740. That's 47.16% lower than February of 22, which was 3293. And you might look at that and go, wow, that's significant. Yes, it is. But put it in a perspective. This was a normal February. February 22 was an abnormal February. So sometimes you hear news reports, oh, sales are down, 47%. And if you only hear that, you might think the market's not good. But they don't always tell you that the market was so much better a year ago. However, take a look at the inventory. Last year, we had 3,607. This year, 2,750. That's 23% lower, well, almost 24% lower. New listings came on at 4,651. Only 2,389 new listings came up. That's a 48.5% decrease in inventory. This is where we're getting concerned from a market perspective. We have a high demand for real estate, probably catching some people off guard, especially right now if you're a buyer. You might be surprised when you see that the property that you're interested in buying is selling with multiple offers. And it's really because we have such a low level of inventory. In fact, if you look at the stats here on this chart, this puts it in a perspective. You see the blue data here shows our inventory levels since 2008. So you can see that, we really dipped down in inventory levels too in late 21 and early 22. But we are down amongst the lowest that we've seen I don't know, as long as I've been in this industry since 1999, I haven't seen the inventory levels this low. So that really puts it into perspective that if we've got that much demand and so little supply, you can see that we're going to see some multiple offers, especially in the lower priced real estate. One thing that the higher interest rates have done is they've shifted the focus from houses that were, selling like crazy a year ago for 650, 700, 800,000, like they were just flying. Now we are seeing the townhouse condos, for example, selling with multiple offers. I just sold one last week, with multiple offers in one day. And with the higher interest rates, it's just, it's forced a lot of people to look at lower priced real estate. And we have a tremendous amount of people moving here, and they want to get in at the ground level, so to speak, with pricing. So they're really looking hard at those $250,000, $300,000, $350,000 condos, and we're just seeing some really strong demand there. Where once you hit 650, 700,000, 800,000, yes, those properties are selling. Some of them also selling with multiple offers, but just not as strong of a demand. And it's primarily just because it's out of reach from an affordability standpoint, as many people are finding. So that being said, let's take a look at what else went on in the market. Okay, so this chart is showing us the detached home sector of the market in the Calgary surrounding areas. And you can see 61.41% absorption rate. So, 61.5% of the properties that were listed sold, 35% did not. That's still a very strong market. And it's interesting because if you go all the way back to June of last year, when interest rates were still pretty low, we saw 55.61% absorption rate. It even dropped in July to 43.76. So here we are with higher interest rates, and we're at an absorption rate of 61.41%. So I'm going to tell you, everybody, the interest rates have not slowed down Calgary or Alberta by and large, and there's reasons for that. Our economic environment is doing well. Our net migration is doing well. We have jobs here, so there's a demand for housing, and compared to those expensive markets like BC and Ontario, we are very affordable. And I can tell you, if this continues with this kind of absorption rate, if this continues right through the rest of summer, you're going to see properties more expensive in Calgary 6 months from now than they are today. And I don't know exactly how much more, but if I was to make a bold prediction, I think for a detached home, you could be looking at some significant increases, like between 5 and 10%. So if you're sitting on the fence right now, deciding whether to buy, I think the time is now. And if you can pull it off and qualify for a mortgage, you should. And if you do have questions about that, by the way, we've got Royal Bank now in our office. We have a phenomenal mortgage brokering firm in our office. And for people who don't think they can qualify right now, we even have a new rent-to-own program that we've introduced. So you should reach out to me, and I will guide you on what your options are. Anyway, our benchmark price, $635,900. And you can see that's up year over year, 2.53%. And so, for some, you might look at that and go, gee, that's high for a detached house in Calgary. If you grew up here or you're from Edmonton like me, you would say, yeah, that's high. But coming from Ontario, they look at that and go, yeah, that's really cheap. And that's one of the reasons why we're seeing a migration of people coming from these expensive parts of Canada. The hard numbers, 794 sold out of 1,293. And clearly that is just not enough inventory. We are a city of, approaching 1.5 million. We're between 1.4 and 1.5 million. To only have 1,293 detached homes on the market for sale, it's just not enough inventory to satisfy the demand. This is definitely a concern. 31 days on average on the market, but please keep in mind when a property sells and there's conditions, it stays marked as pending for another 2 weeks in most cases. So that number is not really 100% accurate. It's probably more like 15 days on the market. Here's my favorite chart, market distribution. And I know I talk about this every month. And you can see now the 300 to 400,000 is going by the way of the dinosaurs. And it's amazing because it was only a few years ago, there were a lot of inventory. We were about 20% of the market was between 300 and 400,000. And now it's under 5%. So buying a detached home in Calgary under 400 is just becoming almost a thing of the past. 400 to 500 is only 18.75% of the market. Why? It's not that there's lots of people that are a shortage of people that want to buy in this price range. There just isn't enough inventory to support that in that price point. And many of these homes that were once between 400 and 500, even a year ago, are now have come into the 500 to 600 range, which, as you can see, is almost 26% of the market. So that's now become the sweet spot for Calgary, 500 to 600. That's where you'll find the majority of first-time buyers are buying for a detached home. So it's a very, very tight inventory levels in here as well, with the most high demand. And amazingly enough, here at 21% almost, 600 to 700,000. I mean, I knew this was going to happen, and it's happening right before my eyes, that this market is now taking the place of the 400 to 500. So, I mean, when you look at that, almost 50% of all the houses sold are between $500,000 and $700,000 for a detached home. And I'm going to make a bold prediction here, but I'm basing this on what I'm seeing. I think we're going to see in probably the next year, maybe two maximum, that 50% of the market is going to be between 600 and 800,000. That's where this is headed. And that's why I'm kind of shouting from the rooftops that people should be buying right now. If you're not sure to buy, this is a time to buy. I really believe that Calgary will be more expensive. There's just too many things happening to prove that. With economic environment, our tax situation here is more attractive. People want to come here for the affordability. We have jobs. Oil prices are high. There's just all pluses. It's kind of Alberta's turn to go through our upswing in the market cycle. Moving along here, which is I always like to look at this 1 million to 1.5 million. And this was hovering around 5% for the longest time. And now we're seeing more and more people buying their dream home of 1 million to 1.5 million. That luxury market is now over 6%. So that's just continuing to get stronger. And there's no doubt in my mind, as all these prices move up, you're going to see this 1 million to 1.5 million hit 10% in the not too distant future. Okay, we're looking at the semi-detached. This market, 54.9% absorption rate. So almost 55% of the properties that were listed sold. Our benchmark price is at $568,100. And this is always the second choice for people, because these properties are attached, but they don't have condo fees. And if we look down here, the hard numbers, 140 out of 255 sold. And again, that's just not enough inventory to meet the demand for these properties. And people like them. I mean, obviously the infills, downtown market, the anything that's around the Beltline or inner city, these properties are highly sought after. They're desirable. You get a little more square footage. They're beautiful. I mean, if you like living in a mature neighborhood in a newer home, these ones offer that. And there's a high demand for them. And then, of course, if you go a little further into the surrounding areas, the suburbia, so to speak, Auburn Bay or that sort of thing, there's a lot of them down there that you can get into for, 400 to 500,000 or even in the low fives. And they're affordable and they have nice backyards. They're just as big of homes as you would see a lot of starter homes. They just happen to be attached. So there's a real desire for these properties. 36 days on average to sell them. You can see that year over year, though, you've got, as far as inventory levels, they're down 52%, from February last year. So that's why, again, short supply. Here's our market distribution when it comes to this. And you can see there's price points all over the place. The sweet spot obviously is 400 to 500. See, there's no mistake in misunderstanding that, because with the sweet spot being, 500 to 600,000 for detached, it makes sense that the biggest demand would be 400 to 500 here. But almost 50% would be 400 to 600,000. So, you take $100,000 step back between the detached homes. And that's exactly why this is, for most people, this is the second choice, unless you're looking over here, which is this is your infill market, your semi-detached that are more in the, the inner city properties. And that is creeping up. I mean, 700 to 800,000 is almost 11% of the market, and 800 to 900 is 12% of the market. And again, it wasn't that long ago that 700 to 800 was the price point that everybody was buying in these inner city properties, and now it's moved up to 800 to 900, and even some of these luxury ones, 2.79% are semi-detached, and there's some beautiful ones. I've been in some that just are absolutely knock your socks off, drop dead, gorgeous semi-detached properties. Now, here's the crazy market. These are townhouse condos, and I'm just in shock. Like, it was just incredible overnight where the demand for these have just taken right off. I mean, 96.33% of the townhouses listed have sold. I can tell you in 2019, this was 20%. So it just goes to show how things change quickly. I mean, that's absolutely incredible. No wonder we're seeing, multiple offers. The demand is just it's just incredible, and there's just not enough of these to go around. And this is the product that people want. Why? Well, look at the benchmark price right now. It's $369. But if we keep seeing this kind of absorption rate, how long is that $369 going to stay there? I mean, it's just going to push the prices up. And it's happening right now. It's incredible. Take a look at the hard numbers here. 315 out of 327 sold. I mean, that's just about everything that was listed sold. That's insane. I mean, it's just so crazy to see that kind of a demand. So it's something that something to take a very close attention to. And I can tell you, if you're trying to buy one of these, you're probably a little bit frustrated. And I can tell you there are some strategies to try to buy one. And I know my team especially is looking carefully at some off-market listings. And we do a lot of marketing to sellers, and we try to come up with solutions that aren't necessarily getting involved in all these bidding wars either. It's not easy, but that's something that can be done. I for example, I had a property the other night, and we went on the open market. We got 2 offers right away, and we had like 12 showings scheduled. We knew there was going to be multiple offers, but one came in with no conditions, and I was representing the seller, and we countered back at significantly higher than the asking price because we liked the fact there was no conditions, and the buyer bought it. But that kind of strategy can be used on the buying side as well to try to get your offer in and have it accepted before the seller waits maybe 3 or 4 days before they look at all the offers. You can put in sometimes a really strong bid and convince them to take your offer early. So some of these strategies do work, not always, but they can work. I have a lot of experience in this, so I know a lot of the ins and outs and how to make that happen. But you have to be creative when you're having that kind of a demand and you're trying to buy one of these properties. If you're trying to sell one, there's also some great strategies, and I just mentioned one of them, but there's also strategies on how to maximize the sale price as well. So, definitely reach out to me on that because I have a lot of experience on how to do that depending on what hat I'm wearing. Now, as you can see, 40.46% is 300 to 400,000. And then, from 400 to 500 is now 23%. And this 200 to 300 is just dropping like a lead balloon. So no doubt in my mind, if this continues, this 400 to 500 is going to start to catch up to the 300 to 400. We're going to start seeing townhouse condos selling for high 3s, low 4s in a significant way if this continues. And I do think that it will. Okay, apartment condos. Wow. Another strong month, 56.5% absorption rate. It's really been quite strong for the last 12 months, but just like the townhouse condos, it's the affordability factor. People all of a sudden now are comfortable with condos again. They're affordable. I think now that COVID is in the rearview mirror, people are kind of back to being okay with the condo lifestyle. And the walkable communities that it offers, it makes just makes it really easy to get around because most condos are located where there's lots of amenities, and a lot of people are buying them even for rental properties as well. Like a lot of investors want these because the cost versus the rent, the numbers seem to work reasonably well, even though we have higher interest rates. 286,000 is our benchmark price, so we finally surpassed 2015, by the way, because you can see if you look back all the way to 2015, 292, or sorry, we didn't surpass. We're approaching 292. My apologies. So we're you know, as a benchmark price, we're almost back to where we were at the peak of the market. And it is kind of sad that it took that long to get here, but we went through some dark times, obviously, from 2016 to 2021. But the recovery is here, and it just goes to show real estate always comes back if you hang on long enough. Some people were forced to sell for a loss, but the people who are able to hang on are now in a position to be able to sell, and they're maybe back to where they were, and they've got some equity built up, and that's good to see. 491 out of 876 sold. That's a really strong, healthy market. So condos are just back on the map. And I really think that they're here to stay. I don't think we're going to see the dark times of condos go by the wayside like we did. I think with the significant price increases, you know, we're now getting to markets like Vancouver, Toronto, where people will always buy condos in those markets because of the affordability factor, and that's how it's going to be. When you're looking at a benchmark price of maybe in the 700s for a detached home, it's going to force a lot of first-time buyers and people to buy condos, and that's just how it's worked in these expensive markets, and it's going to work the same way here. So I think condos can be a really good investment to get involved in now. You can see here with the market distribution, 49% of these apartment condos are in the $200,000 to $300,000 range, and but, you know, there's no question, just like the other products that I just mentioned, you know, you're going to see this 300 to 400 creep up as well. It's just inevitable. If this demand continues, it's just the way it's going to be. But you can also tell that we don't have a big appetite for luxury condos in Calgary. You know, it just falls off a cliff once you hit 400,000. So the best condos to invest in would be, you know, under $400,000, and then you shouldn't be going wrong if you buy anything in that kind of a price range. So hopefully this has been really helpful. And as always, you know, if you do have questions and you're just curious, just reach out to me. You know, I never get attached to your timelines. A lot of times people call me and they're just even thinking of selling in the next 6 months, maybe a year. I've even gone over to people's homes and done an evaluation and walked through their home and gave them some really good tips on some things to fix, repair, or replace that can bring a lot of value to your property. Even in a market like this, there's some minor things that you can do that can really have a huge payoff. And I've helped a lot of people just get their house ready. It's always paid off. Even just recently, one that I just sold, you know, we took a month just to do a few things like paint and put in some vinyl plank flooring, and man, it really paid off. We got the price we're looking for, and we made some money on those minor changes. And I've got some great connections on being able to install some of these minor renovations as well to give you the payoff. So just reach out, and we'll see you all next month.